Good afternoon. I'm Doug Loud, speaking on behalf of O&M Partners, and I want to welcome everyone to the Sun Metals Serengeti Resources Town Hall webinar. Sun Metals Serengeti currently trades under the symbols of SUNM on the TSXV, as well as SIR on the TSXV. Excuse me, OTC. For those of you who are new to these broadcasts, in 2014, that's 7 years ago, O&M recognized the sea change in the non-deal investing marketing world. Suddenly, information was way more available to a whole new generation of investors that couldn't be found in the key financial centers. Investors were receiving information at home that couldn't even be geared or used to be geared and available to professional investors. So O&M created a digital roadmap to meet this new need. Now, today, after the presentation, there will be a Q&A session. The questions in the Q&A session are for everyone. This broadcast will answer questions you may not have thought to ask. I know that always happens to me. Questions can easily be asked by going to the question portal of the GoToWebinar screen or by emailing us. For any questions that remain unanswered at the end, we will follow up in a timely manner after the end of the call. For those of you who dialed in with your phone, the only way you can hear our pre-recorded introductory presentation is on your computer speakers. So if that's not possible, you will be able to hear the main presentation after about 10 minutes, so please stay tuned. Today, our introductory speaker is Jamie Keach, the co-founder and CIO. Jamie Keach is a Canadian mining engineer and natural resource financier. And aside from being a well-respected part of the mining community, Jamie also has a creative side for producing engaging and thought-provoking content about the industry. He is the co-founder of Capitalist Exploits and the host of the Resource Insider podcast, which is a must-listen. Now here's Jamie.
All right. Good afternoon, everyone. My name is Jamie Keach. I am a partner at Inventa Capital here in Vancouver, BC, and I'm also the founder and the chief investment officer of a newsletter service called Resource Insider, where we go out and we look for the best investment opportunities in the mining and energy sectors for our members. And I want to talk about a couple things today, because people who are watching this video, you obviously have an interest in the mining and metals space. Some of you have maybe been investing for some time now, and probably a lot of you have lost money in this, the last few months notwithstanding. And I think that's important to touch on, because mining and metals is a very, very challenging sector to invest well in and to make good decisions, because it is so opaque and because a lot of the systems are actually stacked against you. So many of the best deals and the best opportunities are controlled by big funds, bankers, or industry insiders, and the average retail investor often doesn't get access to the best investments until so much of the money has been made. So it's really too late to see those 10x returns, or sometimes even 100x returns that many resource investors, one, have heard of, and two, are really searching for. And that's a big reason why I started Resource. I began my career as a mining engineer. I worked all over the world on mine sites, looking at drill core, helping design projects. And, in my spare time, I invested in opportunities, and I found I was continually either not making money or not getting the returns I wanted, and often even losing money, even when I was looking at projects that I knew as an engineer, with many years of experience in this space, were technically sound, were good deals, were good assets, and often run by good teams. And I couldn't figure it out until I moved to Vancouver and started getting involved in the business of building new mining companies. And then I really got to learn the ins and outs of how these things were set up. So if you've lost money in this space before, don't feel bad, because you're really fighting against a system that has been designed to in some ways screw you over and take money from you. And as I got to learn more about what was going on, I realized how to make money, and that was by participating in private placement investments, where you're actually investing directly into the company you're buying new shares and you're giving the company money to go out and conduct drill programs or complete feasibility studies or do actual work instead of just trading on the market and essentially acting as a liquidity event, as an exit for someone who got in much sooner than you. And when I realized this, I started making these investments. I started having great returns, and I saw the potential to launch Resource Insider. And that's all we do at Resource Insider. We sell our product to accredited investors only, and we go out and we look for opportunities to invest our own money alongside our members in the best new deals in the mining sector. So when CEOs and entrepreneurs are looking to start a new project, looking to build a new company, they come to us for that early capital. And we have a track record of supplying capital with great investors into winning opportunities. And I want to talk a little bit about the things that we actually look for before we make an investment today, and what you should be looking for regardless of how you invest, regardless if you're buying stock in the market, if you're working with us, if you're working with a great broker. These are the things I really think every resource investor needs to be cognizant of. And we'll break it down into two areas. There are the macro trends, and then there are the micro trends, for lack of a better term. In terms of the micro trends, it's very simple. We look for great assets led by great teams with proven track records. And that's what we do. We go out, I get to know management teams, I go through the technical details of the projects, I go through the financial details of the company. I make sure it is being set up in such a way that investors have a good chance of making money. And then we participate by private placement. So again, in a private placement, we're buying stock directly from the company before it is traded on the open market. We're not acting as a liquidity event for someone else. We're getting in early, and we're investing the same way that many of the best known names and titans of the industry often do. Guys like Ross Beatty or Rick Rule are, well known for doing these style of investments. And the goal of Resource Insider is to help democratize that for the average retail investor that hasn't been able to get exposure to these things in the past. And you don't need to have millions of dollars to do it. Many of our people come in for $5,000 or less in a given investment. And this is one of the, I would say, the great lies of this space, to think that you can't invest like these millionaires, in some cases billionaires, just because you don't have $1 million check to write into every deal. Often we have people coming in for a few $1,000s at a time, and they're seeing great returns. Now, once you've found the right micro things to look for, the right micro elements to look for, great asset, great team, proven track record, the things you want to be considering are the macro elements that are really driving, I would say, metal prices and the overall narrative in the space. And there are two things that we follow very closely at Resource Insider and are really driving our underlying investment thesis. And that is, one, the energy revolution. That's the transition from a, traditional fossil fuels based energy system to a new electrification of the world. And that includes things like, obviously, renewable energy, such as wind, solar, hydro, and obviously the EV revolution as well. So many countries around the world are putting in policies that are demanding this energy transition from fossil fuels to electrification. And the end result of that is going to be an overwhelming demand for the commodities that are required to make that transition. And that's things like lithium, cobalt, nickel, copper, graphite. These are the metals that are going to be the oil and gas of the future. And for anyone that knows anything about the energy space, you know that it is an order of magnitude bigger than the mining sector. But mining is going to be shifting and filling that role of energy in the future. And I believe we're going to see astronomical price rises in those commodities. And at Resource Insider, we are positioning ourselves to take advantage of this transition. I think we are really in a once in a generation moment here, and that the people that think ahead are going to be able to not only protect their wealth in what is a very, very tumultuous political and economic environment, but they're going to be able to grow it significantly. I think that this energy movement is where the next generation of multimillionaire and potentially billionaire investors are really going to be made. And so that is really driving many of our investment decisions. The other thing is what seems to me to be really the perpetual devaluation of currency around the world. You know, governments all around the world, in Europe, in North America, and elsewhere, are printing money at rates that have never been seen before. And we all know that the end result of that is a huge devaluation of the value of the dollar and pretty much every other currency. And in situations like this, it's crucial that investors have exposure to what we would call real money. And that comes down to gold and silver, precious metals. So precious metals make up a key component of our portfolio. And it's something we're very focused on, and we've had a tremendous amount of success in so far. For investors listening at home, what I hope you'll take away from this short introduction is that you really need to be thinking about the overriding trends in the world that are driving your investment thesis. Electrification and the devaluation of currencies should be top of mind. Equally importantly, when you deploy money into this sector, understand that it is a system that has been designed for you to lose money. And you need to be very, very careful to back the right management teams who are building the right assets and building real companies. These are people that have a track record of creating wealth and not just consuming it and destroying it like so many people in this sector. At Resource Insider, we're very focused on helping our members get access to this. So I highly suggest you check us out at resource-insider.com. But there are also many good alternatives, and there's lots of great newsletters written on this. There's also great brokers in the space that can assist you in making good decisions. Thank you very much for watching, and thank you very much, guys, for having me today. Best of luck. Best of luck.
Thank you very much, Jamie. That was quite interesting. Today, our presenter is going to be Mark O'Day, the VP of Exploration and Development. Dr. O'Day has built and financed international mining companies from Canada to Africa, taking them from exploration and discovery to development and operations. His companies are built on a common foundation: high quality, long life projects with lasting economic opportunities, community benefits, and environmental protection. Most recently, Dr. O'Day co-founded and served as executive chairman of True Gold Mining. After building the Karma heap leach gold mine in Burkina Faso in West Africa, True Gold was sold to Endeavour Mining in 2016. As co-founder and CEO of Frontier Gold, Dr. O'Day then grew that company from a startup to its 2011 sale to Newmont Mining, a deal that included the spin-out of what we know today as Liberty Gold. Now here's Dr. O'Day.
Great. Thank you, Doug. Scott, can you hear me okay?
You sound great.
Okay, perfect. Well, welcome everybody. I looked at the list of names that got sent to me about a half an hour ago, and there's lots of names I recognize, and some of you have already heard this presentation in different formats, so welcome again. What you're looking at on your screen here today is the homepage of our sort of a marquee project that sort of underpins this deal. Just before Christmas, we announced the merger of these two companies, Sun Metals and Serengeti Resources. These are two companies who share assets that are literally next door neighbors in a bunch of places in British Columbia. And there's so much logic behind this deal from an industrial sense, unlocking a bunch of synergies as we look at ways of developing these projects that are effectively co-joined. And what you're looking at on the page in front of you right now is an example of that at our flagship projects. So at Sun Metals, we have a project called Stardust, and it outcrops there in that rusty rock there that you can see in the foreground. And it's part of a large and growing a massive sulfide, high-grade massive sulfide system that now has over 900 meters of vertical extent that we've drilled off, and it's still open. And it's sitting right next door to Serengeti's key asset called Quenica, which is sitting just under the word Serengeti there on the flat part of the valley. So these are two projects. They're both copper gold and literally share a claim boundary. And one of the key rationales behind this deal is that together they actually make the project look a whole lot better on a combined basis. So we think there's an opportunity here to unlock a whole lot of value through looking at ways of combining assets like these two, for example, using operational flexibilities and different levers to create a development plan moving forward. And it's going to be a big part of our focus this year. And this is one of a series of projects in BC that we've now put together through this merger. So in effect, we've created a brand new, diversified, BC-focused copper gold developer with one of the nicest pipelines in the space today. We can skip through a couple of slides here, please, Adrian. So we'll have some forward-looking statements. Just want to make that clear here. Next slide. Let's just look at the lay of the land. It's a big portfolio that we're pulling together for the first time. And there are really three distinct centers of gravity or critical mass areas in the portfolio that I want to touch on today. The southernmost one is what I've already talked about as an introduction, which is the combination of Stardust and Quenica. You can see that at the bottom of your page. 40 kilometers to the north, you see Lorraine and Topcat. And again, the two companies share a claim boundary. Sun Metals is bringing Lorraine to the table, which is a high-grade copper gold porphyry asset that was tucked inside of Teck for about 12 years. We've now sort of excised that. We bought it back from them, and it's surrounded by one of Serengeti's properties called Topcat. On a combined basis, it's a huge package of ground that offers a really good exploration opportunity to grow an initial resource and make new discoveries. And then the third property that's going to be a key focus of this deal moving forward is East Niv. You can see it up near the top there. I don't know if Adrian, you can use your cursor, but East Niv sitting right there just south of Kames, just off the power road there, you can see, and it is a brand new grassroots discovery that the Serengeti team have brought to the table over the last couple of years through their own efforts of generating this target. And it's turning a lot of heads, frankly, because it's new. It looks like it's got some size potential, and it's never been drilled. So we're going to drill it for the first time this summer and hopefully come up with BC's newest porphyry copper gold discovery. So let's sort of attack each of these separately and look at the merits and the synergies that are going to be created through this merger. So right in front of you now, you see a project footprint map that links the two projects, Stardust and Quenica. And these are projects that are literally a few kilometers apart. You can see the scale bar, about 6 kilometers, 7 kilometers apart. You can see them on the first slide from the hill, how they are literally connected. And what we envision here really is a centralized, or the potential for a centralized processing facility that captures all the components of these two deposits. And there's 4 of them listed. You've got the Stardust Canyon Creek zone, which is the upper part of Stardust. You've got the 421 zone, which is the lower part, combined with the open pit and underground sort of block caveable component of Quenica, all of which are coming together in a centralized processing facility within the same project development footprint. So, these are two projects that were sort of hiding in plain sight. And, about a year ago, we sort of recognized jointly the benefits of combining the two to create that critical mass. Stardust provides the grade component that Quenica was looking for, and Quenica provides the tonnage component that the Stardust project was looking for. And collectively, we achieved some critical scale, streamline a whole bunch of efficiencies and processes, and end up much closer to a development stage project than either of them do on their own. So one of the key attributes that have us excited about this portfolio, and in particular this combination, is grade. And right now, the world is awash with 0.3% copper deposits in the porphyry world. There's no shortage of them. In fact, it's sort of the global average of any producing copper mine in the porphyry space. And we're looking at two opportunities here that are significantly higher grade than that. And so I think offer additional flexibility and opportunities on a combined basis. And why don't we start with the Stardust asset in particular on the next page. So here's a rendering of our Stardust project. It starts at surface. You can see that rusty outcrop at the beginning of the presentation, that daylights. And we've been able to track that down through drilling down to about 900 meters. So we've got continuity from surface down to about 900 meters in a growing, incipient, still exploration stage asset that's got an average grade or an average tenor of around 3% copper equivalent. It's still growing. As I said, it's not closed off. It's not faulted off anywhere. We've got every expectation that this is going to grow over time, but as it sits right now, this is what it looks like. And it's characterized from top to bottom by these thick intervals of really quite amazing grades. And you can see a table on your left-hand side here of some of the highlights from that drilling campaign that we've done over the past 2 years, really bringing this to life. So our discovery hole down deep is shown at 100 meters of 5.3% copper equivalent. And that's made up of, you can see it in the table here, it's made up of 2.5% copper, 3 grams gold, 52 grams silver. That was the hole that really got everybody excited. Teck came in as a cornerstone investor, took 10% of the company. It allowed us some funding capacity to keep expanding that system. We stepped out up and down plunge from that hole and built continuity hole after hole. And now we've built this sort of 3D shape here. You can see it's a steeply plunging body that is effectively a massive sulfide system related to a carbonate replacement style deposit. That's the classification that it fits into, which can be really big and high grade. So it's sitting here as characterized by rocks that look like this. And these are visually spectacular looking rocks, very heavy to lift in the core box, so you've hit something good visually. And they're characterized by an assemblage of coarse grained sulfides dominated by chalcopyrite and pyrite, running high grades of silver and gold. So a very special system, and represent a high NSR value slug of real estate here that provides a real sweetener and component to what's sitting right next door at Quinnica. So at Quinnica on the next slide, so this is an asset that has been developed by and drilled off by, discovered by Serengeti, dating back about 15 or 16 years. And over the course of that time period, they have de-risked the project, they've expanded it, they've expanded the footprints, found new zones, and now it's sitting with a global resource, sort of in all categories, of around 300 million tons of 0.2 to 0.3% copper and similar kind of grades of gold. So it's a big system. It's a big PC style porphyry copper gold system. What's interesting from our perspective and our joint perspective here is that within that sort of halo of lower grade material that's typical of BC porphyries is a core zone or a central domain that has much, much higher grades. So really there's sort of two deposits within one. There's the broader envelope of typical porphyry grades, and then in the middle of it, there's a domain or a subdomain of much, much higher grades shown in this slide or these two slides. So you can see some of the drill holes here on the left-hand side, 500 meters of 0.66 copper, 0.8 gold, 514 of 0.64 and 0.8, 438 of 0.71, 0.83, I mean, these are spectacular grades for a porphyry in any jurisdiction, let alone BC, in a project that you can literally get in your car in from Vancouver and drive to. You know, this is a project that you don't have to fly to South America to go after. This is a project that you can get to site by lunchtime leaving Vancouver. And it's sort of been sitting here hiding in plain sight right next door to a much higher grade deposit even than this, which is Stardust. And in fact, you know, just before Christmas, the Serengeti team published a 700-meter hole, which you can see on the right-hand side here, that returned 0.88 copper equivalent right through the guts of the system, showing that this has good continuous high-grade mineralization from an open pitable depth down to what could conceivably turn into a block cave type geometry. So our goal here post-merger is to really explore this possibility of better defining this domain, getting better constraints on it, better geological controls, hopefully expanding it and finding out what its true dimensions are, and seeing what kind of mining method it's amenable to and how it can be combined with Stardust right next door. And we think the similarities of metal type and similarities of metallurgical responses could lend themselves to a really interesting development scenario. On the next slide, here is a table of examples of drill holes that the Serengeti team have drilled over the last couple of years through the guts of that high-grade zone. And the numbers speak for themselves, right? You don't see a lot of drill holes like this in the copper gold space, especially in Canada. But you've got hundreds and hundreds of meters, you know, up to 700 meters in some cases of, you know, up to or greater than 1% copper equivalent. So these are certainly grades and thicknesses that could lend themselves to bulk tonnage underground and obviously open pit mining methods, especially when you look at what they're doing at New Afton, for example, similar kinds of grades, or what they're proposing to do at Red Chris, just up the road, which is being managed and developed by Newcrest, the world's premier block cavers. So it's an interesting concept. We think this has got legs and it's worthy of pursuit. And one of our key objectives this year is to drive this thesis down the road and test this model. Let's see how this hangs together. And if our thesis is correct, we have a project that, you know, could enter the development phase of its life cycle here in the next year or two. So moving on from this cornerstone asset combination, you can see the obvious synergies. The same sort of thing applies 40 kilometers to the north with Lorraine and Topcat. So those are two projects that each company is bringing to the table. They are joined by a common claim boundary, and they unite a huge chunk of prospective real estate characterized by these high-grade alkalic copper gold porphyry systems, much like we just saw to the south. And so you're looking at a picture of part of Lorraine right here. What's interesting about Lorraine from our perspective is that it's a project that has been de-risked to a certain degree by previous work done by Teck. So Teck owned this project. They earned a 51% interest in it about 12 or 13 years ago, spent a few years drilling it, made some really exciting discoveries, but effectively have sat on it for 12 years, and it hasn't really been looked at or surfaced since. So 6 months ago, we at Sun Metals struck a deal with Teck to acquire 100% of it. So it's now part of this combined portfolio that we're bringing to the table here. And on the next slide, you can see how these two projects fit together. This is more than just moose pasture. This is a big part of a coherent batholith that's deemed to be highly prospective and is peppered with a whole series of these porphyry centers, some of which are known and have been drilled, and others haven't been discovered yet, I'm sure. But there's been some really interesting drill results done on this property, or a series of these showings that are illustrated in this table. So really near surface intercepts of 100+ meters of really good copper gold grades, just sitting there idle effectively, waiting to be followed up on by a new generation of exploration effort and activity here. So we have a center of gravity. It's a significant property package. It's in the right geological environment. It's underpinned by great looking grades. It just needs a sustained budget and a campaign and a program here to unlock a bunch of value here that we think we are going to be able to do over the next couple of years. So this is a legitimate second project that is more advanced than grassroots and has clear visibility to growth and resource growth. The next slide is the final project that we're going to focus on this year, and it's called East Niv, and it's really the baby that the Serengeti team have brought to the table here. There's a lot of people in the industry excited about this because it is a virgin discovery. It's never been drilled. It's got hundreds of meters of outcropping mineralization with good copper gold grades, lots of highly prospective boulders that need to be traced back to their source, lots of epithermal signatures, lots of porphyry signatures, good geochem, good geophysics, and we're going to put the first drill hole in it this summer. And so we've got a lot of buzz and intrigue and interest around this project. And if we're lucky, we tag into a fertile system with a couple of holes this summer and put a new porphyry discovery on the map in BC in the right belt of rocks. So we're in the Stikine terrain. We're just south of Kemess, next to that power line. So very well located in fertile terrain with, ironically, highly underexplored. So that sums up the portfolio. We think it's very exciting and spans the whole spectrum from early stage to much more advanced stage, underpinned by a good inventory of copper, a couple of billion pounds of copper, 2.5 million ounces of gold roughly, and good silver credits. So it's a great starter kit here that we can de-risk and advance and grow over time. It'll be a catalyst-rich year. So we've got a timeline here with some of the bigger events that are worth paying attention to and following. The merger is going to close on the 4th of March, shown here, and we're immediately going to get a resource out on the 421 zone, which is Stardust, which hasn't had a resource update on it at all. So that'll be the first ever resource on that. We'll initiate our program at Quenica, get out on the ground, start drilling off some of that high-grade core zone that I was talking about with those great intercepts. Start our program at East Niv, start our field program at Lorraine, start our drilling campaign at East Niv in Q3. So results are going to start coming in through late summer here, fall, and the balance of the year from these drill campaigns, and then culminate in a series of resource estimations on Quenica to better define that high-grade zone, a resource on Lorraine, and turn a historical resource into a compliant resource and establish a new baseline value for Lorraine. And then come out with a PEA either at the end of this year or early next year on what the Stardust Quenica combination could look like. So next slide. So here's a sort of a cap table, pro forma cap table. In terms of the mechanics and the sort of the plumbing here, the Serengeti entity is taking over Sun in a 0.43 to 1 exchange ratio. So Serengeti is the surviving entity. It then gets rolled back 2-for-1 in a 2-for-1 consolidation. So we end up with a roughly 120 million shares outstanding post rollback and post merger. That's on a fully diluted basis. In connection with this deal, we've raised $10.4 million. Net of fees and change of control provisions, et cetera, we'll start life out with about $8 million of hard dollars, and certainly enough in our treasury to get going and get these programs underway and get through phase one of our campaigns this year. So next slide. In terms of the management teams and boards, we are pulling in 3 members of each board of directors into a new board slate of directors here. So I've stepped in as executive chairman. Dave Moore will step down as CEO but remain on the board. And we're bringing a new CEO in that we'll be able to announce upon the closing of this deal. We brought in a new chief geologist that will be announceable at that point as well. On the board side of things, we've got Teo Dechev and Lou Lorick, who will remain from the Serengeti side, and Rick Bales and Sean Tetzlaff from the Sunmetal side. And then the whole exploration team will be driven under Ian Neal, and the CFO remains Lauren McDougall. And then we have a strong technical advisory team as well. Eric Strom is currently a director of Serengeti, and he'll remain a strong technical advisor. And I flag him because of his specific block caving experience, both at New Afton and at Red Chris for Newcrest right now. So he's an important technical powerhouse here for the combined team. Next slide. So just to sum things up, we've assembled a phenomenal looking pipeline, in my opinion, of copper gold assets in a tier 1 jurisdiction. So we're in the right commodity, in the right jurisdiction at the right time. BC is certainly heating up. It's a place that more and more companies are flocking to as a highly prospective place with an ability to do business here. We've got the big boys moving in from Newcrest to South 32 to Newmont, and the list goes on, and everyone looking for their sort of piece of real estate here and how they're going to approach this district, with a whole bunch of activity and exciting new discoveries happening from junior explorers and intermediate developers and producers. So we're happy to be here. I think this is a series of projects and a deal that makes a ton of industrial logic. There's a huge number of synergies that we're going to be capturing here. And with a repopulated board and a C-suite that's going to be coming in with access to capital and sponsorship, I think we've got a great shot here at unlocking a whole bunch of new value. So with that, I'll sign off and hand it back to Doug for any questions.
Thank you. That's really, really very interesting. Given how you've got the company, have the 2 companies merging, are they merging each individually inside of a corporate structure above them so you could spin one out under the Canadian tax laws, or are they mashing together themselves to become one company that's all one piece?
So they're mashing together, and by that, Serengeti is acquiring Sunmetal. So Serengeti is the surviving corporate entity, and it's consuming Sunmetals, right? So it survives. It will be renamed and rebranded in connection with the closing of this deal, but it is the surviving entity.
Okay, and all the permits get transferred and all those good things?
All the permits, all the First Nation agreements that are in place at all the projects, all get transferred.
That's great. That's great. Let me see if we have some other questions. For the people in the audience who may want to ask a question, remember to use the little question panel there on the GoToWebinar screen. Let's see. Chesley Morton, do you have any questions today?
Yes, I do. And first of all, I got to say that's a really interesting presentation. I am surprised, given all your various projects, that you find time to breathe, actually. I know this is not the only thing you're involved in. So, well, that sounds daunting. Rudy Frank has a huge gold copper project up in your part of the world. And his only problem is that it's going to take multi-billions of dollars to develop. So it's early stage, but do you think that your situation might be a little less daunting as far as expense?
Well, I do, and I think that's one of the opportunities that differentiates this this combination. When you look at the size and scale and the footprint of Stardust and Quanica put together, we're not looking at a behemoth, multi-billion ton deposit. We're not looking at a $1 billion+ capex to build. In our estimation, we're looking at something that's smaller scale, right sized for the environment we're in, and right sized for, frankly, for the resource, right? So I'm a firm believer in, maximizing the economics as opposed to maximizing the scale. So if there's an ability to make Quanica smaller and remain economic and coherent, and combine that with Stardust and end up with a smaller development footprint, but smaller capex and production profile, but still generates a good return, that's the way we will go, right? So we're not moving billions of tons of waste rock here to get to the sweet spot. There's an existing core that parts of which obviously are going to be amenable to open pit, and we hope that the underlying part would be amenable to some kind of underground bulk tonnage, underground mining techniques that don't involve moving a huge amount of tonnage.
It also appeared that you are either on or close to road access and power and your projects. With regard to power, is that already claimed by some other operator in the area? Would they have to upgrade their lines, or is that something that you could tap into without too much trouble?
I believe we can tap into it, and from memory, I think it's about 80 kilometers away. I could be off by 10 or 20, but I think that's the distance to the nearest power. And yes, it is accessible by road. So when you look at infrastructure and ticking that box, it definitely does tick that box. We're in a great part of BC that is road accessible, close to power, not in highly mountainous terrain, and not in heavy snowfall or precipitation. So it's well located, and we think there's a great opportunity here to leverage that.
Super. And then one final question. I know it's early on. You've still got a lot of work to do with regard to feasibility studies and such, but do you anticipate it's some form of concentrate that you'll be trucking?
Well, that would be the idea. Yeah, you'd create a concentrate here and then move that concentrate. Yeah.
Okay.
And one note I forgot to mention here in the presentation is that on Quanica, we do have a joint venture partner in the form of POSCO from Korea. So the Koreans are in as a joint venture partner with a 33% interest in that asset, and they're a participating joint venture partner. So they either participate and maintain their pro rata or don't participate and dilute, but they're in there, and Dave and his team at Serengeti attracted them in there because they were interested in that concentrate.
Okay, so they'd be making a claim on a certain amount of the metal, I guess.
They would be, yeah.
Okay, well, that's great. Really interesting project. I'm glad got a chance to see this introductory call.
Well, thank you.
Thanks very much. Heinz Thoma, do you have any questions today?
Yeah, excellent presentation, Mark. You have a lot planned in form of drilling. How much or how long will your money, the $8 million you have, last, you think?
Well, it's certainly enough to get us going on phase one of what we want to achieve at both Quanica and East Niv from a drilling perspective. So we anticipate about $2.5 million program at Quanica and a $2 million program at East Niv. I would imagine at some point in the next 6 months, if there's flow through available, we'd probably raise money and top up the treasury, and if results are warranted, then accelerate the program.
Do you have the permits in place for drilling?
We do.
Ah, okay.
Yeah.
Thank you.
Thank you. Maxwell Vandervelde, do you have any questions today? Let's see. Mr. Vandervelde, are you there? Let us try Michael Potter.
Hi. Thanks very much for a fascinating talk, Mark.
Oh, thanks, Michael.
I'd like to ask some questions about the high grade at Quanica and Canyon Creek. Will the two, looks as though you've got two very different styles of mineralization. At Canyon Creek, you've got a very high sulfide content, and presumably at Quanica, it's typical much lower disseminated sulfide percentage, typical of those porphyries. Will those two types of mineralization be metallurgically compatible?
Well, that's one of the key questions we need to address this year, right out of the gate here. So we'll put out a metallurgical study that's underway right now at Sun Metals. So Stardust, we're doing phase 1 met work at Stardust right now to look at the recoveries, the copper gold recoveries and concentrate grades and that sort of thing. And, you know, assuming that looks promising, figure out how they blend together with the Serengeti material. And Serengeti's done its own independent and quite extensive metallurgical work. That's all in the public domain. And it's, you know, it generates a good clean concentrate and, you know, typical of, you know, a lot of BC porphyries. So it's a good question, and it's one we need to answer here in the next year.
Okay, and going through the last Sun Metals presentation, mineralization was described as being skarn. Is there any chances that there's going to be more of those around the edge of the intrusive?
Well, that is the hope. I mean, if you go back to that long section, Adrian, if you're still driving the presentation, here the view is that, you know, this isn't all that there is at Stardust. Quite the contrary. These are CRD systems that are complex, irregular, erratic, unpredictable. We've got a beautifully defined chute or series of chutes here that represents at least one part of the plumbing system here. But these systems have a way of developing parallel zones, multiple feeder zones, and ultimately tracking them back to the source is something that needs to happen. And so we haven't even found the source yet. And it's, you know, it's a wide open system. It's still, for all intents and purposes, it's still an exploration play that happens to have a well-defined slug of high NSR value rock here. But we have every expectation that this is going to grow. You know, we're not going to spend a lot of money drilling it from surface at this point. But once you're underground, and this would be underground accessible through a ramp ultimately in through the side of the hill. Once you're underground, you're in a much better position to do a lot of that additional exploration and find more of these feeder zones.
Okay, and what causes the high-grade core at Quanica?
So what you're looking at here is a highly deformed interbedded package. Oh, sorry, at Quanica. I thought you were referring to Stardust. So yeah. The high-grade core is, I think, well, it visually looks different. It's a corridor of more intense veining and silicification. And you know, one of the objectives this year is to better define its geometry and to better define its genesis. Whether it's an overprinting gold event or copper event is yet to be determined. I mean, Dave Moore has got lots of good theories on that, and we can follow up with you at a later date. But there's a visually distinct zone that is characterized by more dense veining and so slightly different geometries within that high grade domain.
And one last question. Could Quinnica and Canyon Creek all be part of the same mineralizing system?
No, I wish they could, but they're separated by a major sort of terrain bounding fault. So they're in completely different blocks of rock.
Okay, that's all. Thanks a lot.
Okay, thank you.
Murray, do we have you online?
Maxwell Reynolds' mic is on. Does he have any questions? No?
Yeah.
There you go, Murray. You were
Oh.
just unmuted. One more try.
Sorry, I
There we
always
go.
struggle with this. Can you
Yeah,
hear
we
me
can
now?
hear you. Yep, you
Sorry.
sound great.
I missed just a little bit, but you quickly put out the existing resource for the combined entities on a pro forma basis before the 421 edition, which is coming in Q1. Can you just run by that again?
The existing mineral resource?
Yes, I'm sorry, yeah.
Yeah, so I mean, it's all in the public domain, and technically you're not supposed to add it all up, but there's, from memory here, there's sort of a measured and indicated at Quinnica of around 200 million tons of 0.25 copper and sort of 0.2 to 0.25 gold roughly, and another 100 million tons of similar, slightly lower grade material. And at Stardust, there is a historical resource of roughly 3 million tons, little under 3 million tons of 2.8% copper equivalent. And again, both of them, I'd urge you to go look on the websites for the exact numbers and grades.
I'm sorry, I do plan to do that. I thought you just had it there. Didn't realize there was a problem. I haven't looked at the story before. So,
Yeah.
And then the only other thing quickly from your presentation, the Lorraine Top Cat, you said it's only 40 kilometers away, which is, 30 some odd miles. And I don't remember whether there's a mountain range between you or whether that would be easy to combine the two. So clearly Stardust and Kawanka makes sense to put together, but what about throwing in Lorraine and Top Cat? And if that doesn't work right now, is that why you're just focusing on East Niv and Kawanka this year?
Well, I think that the Lorraine and Top Cat combined property has great potential to ultimately prove something up. Right? There's a historical resource on Lorraine of around 30 million tons of good copper gold grades. And if you did the math and the economics, maybe there's a threshold size and grade that you would need to justify, sorting and trucking that material down to the south. Right?
Yeah, I just thought it might be cheaper than putting the equipment on location there.
Yeah, so it still needs a few years of good drilling and exploration success to figure out what's actually its potential. But it's starting out with a pretty nice core, pretty nice zone of high grade material that Teck and Teck's partner Lorraine Copper found over a decade ago.
So your real focus is Stardust and Kawanka, and to get the PEA out for that, and with a little bit of drilling on East Niv just to prove up if there's a resource there.
Yeah, so I mean the real backstop of value here and the thrust for this year is to advance and de-risk and better define the Stardust Quinnica combination. How does that look? How do you best develop this? How do all these components fit together? How do you sequence them together in some kind of development scenario? And then while that's happening, we're better understanding Lorraine Top Cat from a geological perspective and reopening up that property that hasn't been looked at in 15 years. And
Yeah,
then,
I like your concept of concentration for the next year or two to get real value recognized on the street.
Good.
Thank you.
And East Niv represents a real shot here at a new success, which won't
I
be
get
super expensive. Yeah.
Get it. Thank you.
Very much. Victor Zhao, do you have any questions today?
Hello?
There we go.
Yeah. Yeah. What's the plan for Stardust? Do you do more exploration work this year?
I'm sorry, I didn't quite understand that question.
About the Stardust, would you like to drill more this year at Stardust?
Our plan this year is not to drill more at Stardust. I mean, we might have 1 or 2 holes to go in and test something, but really the focus is going to be on the Quenica high-grade domain to better constrain it, because it will form, a key part of the foundation for any kind of future development.
Thank you. And I think we also have Marshall Barrel on the line. Marshall, are you there?
Yes, I am. Thank you. Thank you, Mark. You put together another terrific opportunity, and it's very, very fascinating. I do have a couple of questions. For those 3 areas, does the combination of Sun and Serengeti give you the land packages at each of those areas that you would want to have, or is there some more opportunity for expansion of the land packages?
I think the claim boundaries that we have right now, so the land holdings, the claim holdings are sufficient. So we're happy with the footprint. I mean, you look at Lorraine Topcat, it's huge. It's about 70,000 hectares, and East Niv is a massive property in and of itself. So we've got more than enough ground to explore here at all of these properties.
Okay. And then do you have, you may have said it and I missed it, how much drilling you're planning on for Quenica and East Niv this year?
So we're planning on about $2.5 million at Stardust Quenica and about 2 at East Niv, as phase 1. So, call it 7,000 to 10,000 meters of drilling.
Between the 2?
Between the 2, yeah.
Okay. And what do you see? I know last year there was COVID, which certainly had an effect and probably continues to do. And various BC operators said the assays were slow to come back because there was a lot of drilling going on, a lot of activity. What do you see this year? Is that going to improve some or probably stay about what it was last year?
Well, certainly the health and safety protocols are going to stay the same as they were last year, if not even more stringent. So, both of our teams at Sun and Serengeti implemented sort of industry standard, or if not surpassed industry standard protocols in terms of health and safety around the COVID issue. The big issue around assays, may continue to plague us. I don't know. It really depends on if these labs have invested in people and equipment. And, they were really the bottleneck for the whole industry, and not only in BC, but all across North America this past year. And I think they were under-equipped, ill-equipped, under-prepared for dealing with the massive resurgence in exploration drilling that has sort of come to light over the last year.
And does it appear that great increase in drilling activity, the raising the funds and then putting them into the ground, is continuing and will continue throughout 2021?
I certainly think so. There's been a lot of money raised. That's going to go get put to work this year. So I do think it's going to be another very, very busy year on the exploration front for everyone.
Okay, good. Well, thank you very much, and we'll certainly be closely watching the developments as you complete the merger and move forward. Thank you for the presentation.
Thank you very much.
Thank you for those questions. We have some that have been sent in that I'm going to try to read. I think you've answered this first one, but just to be sure, what is Mr. O'Day's estimate of the amount of copper between the two companies?
Well, currently you can find those numbers on the websites of both companies. You know, it sits in the range of 2 billion pounds of copper currently. These are current resource estimates. And you know, both deposits obviously are still wide open, and you know, we hope to find more.
Great. Given that, another viewer would like to know, what is the minimum copper price that makes the project valuable?
You know, it's too early to say that. You know, we look at the world through you know, various lenses, obviously, and right now long-term consensus copper prices are sort of in the 325 to 350 range US per pound. You know, the whole copper world looked an awful lot different at 250 copper. So, you know, I don't think BC would be experiencing the resurgence in exploration interest and activity if copper were still 250. So I think we're anticipating sort of long-term prices in the north of 325 range. And that's sort of the price assumption we'd be looking at, seeing if there's an economic outcome here.
Okay. Another person would like to know, what operational efficiencies do you think you're going to have by combining the two companies? So in other words, what will be the G&A after the merger?
Jeepers. I don't know. I don't know, because we're still building our team. So we're still, I mean, both companies were run a little bit on a shoestring, and I think, you know, that's part of the reason that both sort of flew under the radar a little bit. So the opportunity here is to bulk up, you know, staff up, get the team in place that's needed to execute on this big, broader program. I can't tell you what that G&A is going to look like right now.
No, you've got some very interesting projects to go after, and one person can't do it all alone, that's for sure. So yeah. I would expect your team would get bulked up. Last but not least, and I think, again, this is one of your out on the web, and the lawyers may not let you answer it, but is there any way to estimate the life of mine of the combined entity, asks this person.
Again, it's really too early for any of those questions right now. What we need to do this year is get busy on all the work that needs to happen at Stardust and Quinnica to test this thesis, advance it, get it into some scoping level study, and wrap some economics around it. So we're probably a year away from being able to really talk about that.
Well, that, I think, is the questions from the field.
Okay,
Doug?
Thank you.
Maybe we can turn it back over to you, Mark, for some final comments.
Okay, sure. So, you know, just to wrap things up, you know, good projects in great places is an important theme in all of the businesses that we create, and this certainly ticks that box. We're in a great jurisdiction with a wonderful portfolio of projects that have a good shot here in this copper environment to really grow in value and crystallize value for shareholders. So, you know, we're excited to get going. The deal is going to close on the 4th of March. That's our estimation. You know, at which point we'll, you know, put out a news release, announce a new name, announce a new ticker symbol, and start showcasing a team that's starting to come together here to drive all the value moving forward. So, you know, pay attention and stay tuned. Thank you.
Thank you, Mark, and thank you everybody for attending this webinar, which has been very interesting. And I hope your questions have all been answered. If you have more, email us and we'll see if we can get you some answers. Otherwise, thanks and good night. And thank you, Mark.
Thank you. Thanks, Doug.